Welcome to the Capital News. I am your host, Alex Karitis. Today is Wednesday, February 24th, 2021. Thank you so much for joining me. Title of today's podcast, GameStop the System. This is off of another frenzy day in the markets, especially with GameStop. Of course, this was the center of attention about a month ago, and we'll get to the price action on this one today and some comments from Charlie Munger, who is the longtime business partner and right-hand man to famed investor Warren Buffett. For what it's worth, it's a short article off of Yahoo Finance, so we'll take a look at that just to see some of his wisdom and some of his comments around GameStop, this frenzy that we're witnessing, new traders and new quote-unquote investors coming into the system, and some of his thoughts on that. So we're going to get over market performance, day two of testimony from Jay Powell, the Federal Reserve Chairman, today before some of the members of the House. Yesterday he was before Senate Committee, today before the House. That'll end his testimony until 6 months from now, later in the year. And then just another little quick overview of some commodities, because we continue to see a lot of upward pressure on these prices. And to me, it's not because of a whole bunch of organic growth. Some of it may be, and we'll discuss that. But first is some market performance. The dollar index is trading at 89.98, 89.98. So still flirting with that 90 handle, but weaker for the day. Bitcoin, $49,800 per coin at the time of this podcast. Broad weakness for the dollar today, and that trend is seemingly going to continue. Now, we've mentioned before some key levels that we're paying attention to, and we're getting close to some of those key technicals. At least that's how I'm looking at it, at this 89 handle. This basically takes us to where we were back in 2017. Okay, so it's not the end of the world to be trading at these levels, but there's not a lot of support, at least technically speaking, if it breaks through this 89 and even an 88 handle. It's sort of clear sailing to the downside until you hit about 85 or 86. And still, that's not necessarily a lot of damage, although it could be, but those are some of the levels that we last witnessed back in 2010. What concerns me is if this really cuts through butter like a hot knife to the downside, and we take out the lows that we witnessed back during the great financial crisis and thereafter. So there you're talking about a 72, 73 handle. And I'm looking at a chart that's going back to the 1970s. So those were the lows, 72, 73. If we get back to those levels, Houston, we got a problem. And it might not even take getting to those levels before we announce that. Now, I'm still not ruling out the possibility of a final swan song, if you will, and we've mentioned this many times here before with respect to the dollar index, meaning it goes higher, because currencies do trade relative to each other, and with all of the economic uncertainties and political and geopolitical uncertainties that are just everywhere, it's possible that the dollar could be deemed once again a flight to safety should something snap. All right, now, that's likely going to happen, that something's going to snap. The question is, will there be a flight to safety to the U.S. dollar, or will the money go somewhere else? Will it go into precious metals? Will it go into commodities? Maybe cryptocurrencies? Maybe a little bit everywhere. So that's something that we like to monitor, because if that's the case, and we have the dollar index continue to go down, well, guess what's going to happen to a lot of commodities? Well, they're going to go through the roof. And that's pretty much already happening as we speak. I mean, lumber hitting all-time highs, aluminum going through the roof, copper nearing all-time highs. All right? And this is still when we are still in lockdown. There are still restrictions in most parts of the globe. It's wacky. It's wacky to be alive. Like I said yesterday, these markets are a joke. They really are. But again, a lot of this is predictable because of all of the printing that's going on globally. All of that funny money is going to make its way into different assets over time. We saw the financial assets. We see stocks, equities. We see bonds. We see real estate. Now it's making its way a little bit more heavily, a little bit more aggressively into commodities. Overnight futures trading, we have the Dow Jones Industrial Average up about 0.4%. The S&P 500 and the NASDAQ 100 both are trading up about 0.25%. The cash trade in Japan is up 1.5%. A sea of green across the pond in Europe. And the Australian trade also putting on a gain of 1%, as are Chinese stocks at the moment. On the share price front, we have Apple giving back about 0.4%, Tesla gaining 6.2% for the day to trade at $742 a share. What a difference a day makes, right? All you need is the Fed chair to come out and say, oh yeah, we're not taking anything away. We're not going to increase interest rates. We're not even thinking about doing it. We're going to pump $120 billion a month into the system, expanding our balance sheet. We're going to continue to buy treasuries. We're going to continue to buy mortgage-backed securities, even though everything's getting better, even though housing prices are at all-time highs, we're continuing to throw more juice into the system. That's what we got going on right now. Amazon gave back 1% and Facebook gave back 0.6%. On the commodity front, we have WTI at $63.15, Brent at $67.07 a barrel, oh my. Natural gas, $2.79. Gold down for the day, $1,796 per ounce. Silver up for the day, $27.98, so once again flirting very closely with that 28 handle. I like the sound of that. And copper, as we just stated, $4.33 a pound. $4.33 a pound. This thing is just going ballistic to the upside. Now, there can be some organic arguments to be made from a demand side. If countries and companies are very aggressive or are very certain that they want to start manufacturing electric vehicles, well, then you're going to need a lot of these metals. You're going to need a lot of aluminum. You're going to need a lot of silver. You're going to need a lot of copper, tin, etc., cobalt. You're going to need lithium. You're going to need a whole bunch of commodities to go into these electric vehicles. And anything else that's going to pave the way for this quote-unquote green new economy or some variation thereof. The question is, how expensive is all of this stuff going to be? The question is, how efficient at the end of the day is it all going to be? Because part of the argument about electronic vehicles is, well, it's about cleaning up the environment. Well, if we have to do more mining for all of these metals and other commodities, are we really cleaning up the environment that much? Well, we're powering these vehicles via electricity. Well, where's that electricity coming from? Right? Or solar panels? Well, how does solar panels get built? What are the components to build a solar panel? How much land needs to be used to generate a certain amount of electricity to power buildings, to power households, and to power these vehicles? So these things sound good on paper. And I'm sure over time, economies of scale will kick in, and things will get more efficient, and it will be probably some sort of net gain for the environment. But that's years and years and years away. So all of these people that are preaching electric vehicles, solar panels, wind turbines, etc., they're really not looking at the bigger picture. They mean well, but their transition is basically no transition. Just stop anything related to coal, try to stop natural gas, get rid of the pipeline, stop oil, all this crap which makes no sense whatsoever. Especially for a country like the United States of America, which has abundance of oil, natural gas, and coal. I mean, we're shutting industries down. Don't want to talk about nuclear power and other sources, which could be beneficial, at least for generating a base load of electricity, which is crucial. So we have a long way to go. All of this jibber-jabber about green technologies sounds good, but it's not going to happen overnight. And I really wish people were a little bit more respectful of these facts and approach this more from an adult level and say, okay, here's what's realistic. Here's what we can do from a regulatory standpoint, creating incentives for companies to come up and start manufacturing these types of products, et cetera, et cetera. And of course, it comes down to the end consumer too. Because these cars, they still have to be manufactured properly. They still have to meet safety standards. They still have to ride well. Otherwise, the consumer's not going to buy them. And if you continue to have all of their input costs go up, if this commodity run up just basically has no end in sight because you got a double whammy of maybe a triple whammy of supply constraints, of actual demand for these products, and central banks and federal governments going ballistic at the printing press. Well, then when are these prices going to come down? No, they're not. If you continue to have this perfect storm. So how expensive are these electronic vehicles going to become? And if you continue to have slow growth in the economy, who's going to be able to afford them? I mean, that's the joke here. I mean, this is not difficult to piece together. We just did it in 2 minutes. But nobody wants to have these conversations. Everybody wants to continue to pump and dump all of these stocks. Oh, yeah. Oh, yeah. Tesla's going to keep going up. Bitcoin, oh, people are buying Bitcoin. I think, Tesla made more money on Bitcoin than they have selling cars for the past 10 years. I mean, this is a joke. Like I said yesterday, these markets are a joke. We're a laughingstock. Who cares, right? As long as you're somebody who owns Tesla or Bitcoin or something that keeps going up, you don't care what type of damage it's doing to the underlying economy or to society. As long as your portfolio is going up, that's it. I mean, this is really revealing who we are. We are no longer a nation of laws, but we are now a nation of men. This is a jungle. This is a free-for-all. So everybody get yours and don't worry what happens to the next guy. This will not end well, believe me when I tell you. So those are some things to consider. And the other thing that is obviously of great concern, because it's not just taking place in the metal space, but also with agricultural products. So food. That is not going to bode well when you have a bunch of dry tinder all over the place. Revolutions are fought on empty stomachs. If you continue to have slow growth in many parts of the world, especially in countries where there are demographics with younger people making up the bulk of that economy, you're asking for trouble. Because younger people naturally want to be able to find a job, build a career, start a family, and go through, let's just call it the natural process of things. If those opportunities are not there for them because the cost of living is so high, because of inflation, because of printing press policies, because of mismanagement at government, well, then guess what's going to happen? You're going to have revolutions. You're going to have massive protests and riots and coups. That's just going to happen. We've already been seeing it for the past couple of years. There was a little bit of a brake check last year in 2020 because of COVID-19 and all of the lockdowns and restrictions. Got some people off of the streets for a little while, but not entirely. And we're back in full force almost right now. Where we've seen obviously the militarized coup in Myanmar and continuation of strikes by the people who are protesting the coup. We saw the protests taking place in Russia. We see protests taking place in Ecuador. We see protests taking place in Spain. And sometimes some of it's week long. Sometimes it's weekend warriors that are coming out. This is far from over. Far from over. This is a time in history, okay? This is not going to happen overnight. But this decade is going to be absolutely wild. Because they cannot continue to pump everything up because this is their foundation is built upon sand. This is a mirage. It's smoke and mirrors. That's what we continue to hear from Jay Powell today. And we'll get to that momentarily, but let's round it out with Uncle Sam's 10-year junk note that yielding 1.4%. 1.4%, so continuing its climb higher. And as I've been stating here for the past couple of years, right, this is our analysis. There's capital economics presentations on this. In addition to what I've been saying here on this podcast, it's not going to take a very high interest rate or a very high yield on the 10-year note or the 30-year bond here in the U.S. to prick this bubble, because this bubble is even more fragile than what it was last year, 2 years ago, because of the immense amount of liquidity that we have thrown into the system, the amount of zombie corporations that we have created, and the amount of zombie corporations that we have continued to sustain. This is a net drag on economic growth today and in the future. About 20% of U.S. corporations, all of them, small, mid, large, are classified as zombies. That was a couple months ago. So I can guarantee you that number's even worse today. No end in sight with stopping these policies. And I wish somebody would ask Jay Powell, why do we even have markets? And I'm being serious. Why do we even have markets? Why have a stock market? Why have a bond market? Why even concern ourselves with this? This is basically a middleman. Just Federal Reserve, print the money, and throw it into our bank accounts and call it a day. That's it. And you can make it even. Everybody gets the same amount. Or you can say, okay, well, everybody has different needs and desires and wants and this, that, and the other. So if this guy needs $1 million, give him $1 million. If this guy only needs 10 grand, give him 10 grand. They're equally happy. However you want to do it, because clearly there are no negative side effects or consequences to these types of policies that they continue to enact. And they believe they can be in front of anything that gets out of hand, which is completely ridiculous because they're always reactive for the most part, and they're always making the wrong decision. And of course, we have to continue to pay for it. But if you're not going to allow for true price discovery in these markets, then why have them? If they can only go up, if they can only be a perpetual money-making machine, and if you're not going to allow a lot of businesses to go under, which is why you're propping them up, turning them into zombies, well, then why have markets? Why have the New York Stock Exchange? Why have NASDAQ? Why have any of these platforms? Why have the Chicago Board of Exchange? All of it. Get rid of all of them. Why have these people going to work? You don't need it. Print the money, and there you have it. Because if everything's just going to go up, well, then just give people money. There's no price discovery. There's no need to do any type of research. So why do you have to have financial advisors? If everything just goes up, well, then what good are they? What are they doing research for? Everything goes up. That's it. That's the end of your research. You're done. You don't need to pay somebody 6 figures a year to do that. They're going to print the money. It's going to go here, and then it's going to go up. Just get rid of the middlemen and just put it in people's bank accounts. That's a legitimate question to what these idiots are doing. And I would like to hear his answer to that. When is this going to stop? What is the limit? Because at $120 billion per month through the end of this year alone will put the Fed's balance sheet over $8.5 trillion. And I think it's likely going to hit $10 trillion. Because nobody else wants this crap, our debt, and I don't blame them. But that's what's going on everywhere else. Nobody else wants China's debt because it's crap. Nobody wants European debt because it's crap. So the People's Bank of China is buying theirs, ECB's buying Europe's, Bank of England's buying the UK's, etc., etc. That's it. This is an experiment. This is one of the biggest, probably is the biggest economic experiment that's ever been tried. Well, sometimes you got to change it up in that experiment to see what really happens. So, Mr. Powell, if you're saying that we're well on our way to recovery, yes, it's going to take a while, but we're on our way. If you have one bank and one Federal Reserve president come out after the next saying, okay, our people think that GDP is really going to take off this year, well, then why do we continue to need the support of quantitative easing and all of this other bond buying mess? Just take it away. And then we'll see how strong and vibrant this economy is. But they don't want to do that because they know without this stimulus, without this funny money propping it up, it collapses. It collapses. And we can see stocks come back. They can come down for a day or two, maybe even a full week, only to see this type of run-up that we saw today across the board. These markets are insane. There's really no other way to put it. And Jay Powell continues to dodge the questions asked of him today, continues to sweep any inflationary concerns under the rug, that they can get in front of it, that they have the tools necessary, that we're targeting 2%, which is a ridiculous number. They're pulling it out of the behind, and they're just making it up. 2% sounds right. That's all. We're not really killing them. It's death by 1,000 cuts. Let's just swipe them 2% here, and then next year we'll steal another 2% there. Of course, they're stealing a lot more through inflation, and their goal is price stability. Dual mandate at the Fed, price stability and full employment. Well, it doesn't take a genius to understand that more stable prices would be a year-over-year change of 0%, not 2%. And if 2%, why not 1%? That's 1% more stable than 2. Where are they coming up with these numbers? And of course, what the Federal Reserve looks at when it comes to inflation, they like to strip out, the real cost of living. They like to strip out food. They like to strip out energy. Because, why count the things that people actually need to live? Cost of living, I need these things to live. No, we're not going to look at those things. This is the joke. Nobody questions them. Nobody asks them about it. Because these politicians are a bunch of cowards. They're a bunch of spineless weasels on both sides of the aisle. Because nobody wants to go back to their constituents and say, okay, we messed up. You want to continue paying for all this stuff that we promised you? We're going to have to raise taxes. No politician wants to do that. Because raising the taxes on the rich ain't going to do it. We've gone through this exercise too many times. Okay? It's basic math. Don't insult me. Don't insult yourself anymore. Get with it. Okay? So people's taxes are going to have to go up. They don't want to do that. Or they can go back and say, well, yeah, we made you promises that you're going to get X, Y, Z. You're not. We're going to have to cut spending. No politician wants to do that either. So along comes the money fairy in Jay Powell, and he says, hey, I'll finance all this stuff to keep this going. You will? Yeah, I'll do it. I'll do it. Even though the Fed is supposed to be the responsible one in this type of situation and say, no, we are not going to continue to finance this insanity. We are not going to continue to run multi-trillion-dollar deficits. You got to get your act together, Congress. That's what they are supposed to be. The Fed can serve as a check against this insanity that gets pushed through Congress. That check is we're not going to finance the debt. That means interest rates are going to go up, which means our debt servicing costs are going to go up. And that's going to start raising some red flags in the political arena. People are going to say, oh no, we're not going to spend that much money servicing our debt. Not going to happen. See how this is supposed to work? But they just, one hand washes the other. They facilitate each other. That's all it is. That's all it is. And that's how you know the true nature of these politicians and central bankers. So get off of it, whether you're Democrat or Republican. These people do not care about you. They do not care about you. They do not care about you. How many more pieces of evidence do you need? They simply tell you what you want to hear at a time that you want to hear it to get the vote. And that's it. They don't ask these hard-pressing questions. They're not even that hard. They're not difficult. It's common sense. It's common sense. If you can print this much money and you say it's a good thing, well, then print a multiple of that, and it must be great. So let's do an experiment. Stop printing this money. Take it out of the system. Stop doing it just for a month, and let's see what happens. Let's see what happens if you're so certain that the economy is vibrant and coming back. Let's just see what happens. GameStop stock up 104% today. 104% today. An increase of 47 points, trading at $91.71. Market cap now at $6.4 billion. Recall about a month or so ago, it was north of 24, I think, somewhere around there, around 24 billion when it was at, 400 and some dollars a share. And after hours trading is up another 83%, putting on an additional 76 points to trade at $168 per share. This is GameStop. And this is funny. I'm looking at this on Yahoo Finance, and the 1 year target estimate, basically sort of, I guess, the average of the analysts who are covering it. I believe that's how they calculate. But nonetheless, the 1 year target estimate is $13.44. So we're a multiple of this. We're over 10 times this now, as it stands in after hours trading, again at $168 a share. These are the markets we have, ladies and gentlemen. They make no sense whatsoever. There was a strong case from the short sellers with respect to GameStop as to why they entered a short position. It doesn't mean that they have to be right. It doesn't mean that the company was going to zero, that they were going to go bankrupt. But we know the story. We've been down that road before. So the question, of course, is how much higher is this going to run up again? And what's the cause of this at the end of the day? Is somebody, again, just playing with these markets? How many people, are going to wake up tomorrow and see, GameStop trading at $168 a share and think, oh my God, it's going back up to 300, 400, 500 like it did last time. I have to get on the train. I have to make some money. I have to do this. And then boom, they're going to get wiped out again. A lot of people have not learned their lesson. And a lot of people who maybe didn't get in the first time are saying, oh, this is my chance to do it now. I was afraid or I didn't have the money, but now I do. So let me get in and chase this thing. A company that was trading, hold on, let me bring it up. Where were we a year ago? Oh, $39, $52. Let's see where we were here. This is crazy. I'm sorry. A year ago it was lower than that. I looked at year to date. My apologies. A year ago, 17, 15, 10, 6, 4. You know, it depends on where you go. $4 a share back in last April. Yeah. Why not be at, $168? It's completely rational. Trade at your own risk. Here's Charlie Munger again, the right-hand man and longtime business partner of Warren Buffett. So here's the article out of Yahoo Finance. Charlie Munger, vice chairman of Berkshire Hathaway and longtime business partner of Warren Buffett, issued a strong condemnation of the businesses he said enabled the recent frenzy of speculative trading by retail investors. The 97-year-old investor, speaking during a question and answer session at the annual meeting of shareholders of the Daily Journal Corporation in Los Angeles, responded to a query about the recent run-up in shares of heavily shorted stocks like GameStop last month. Quote, that's the kind of thing that can happen when you get a whole lot of people who are using liquid stock markets to gamble the way that they would in betting on racehorses. And the frenzy is fed by people who are getting commissions and other revenues out of this new bunch of gamblers. And of course, when things get extreme, you have things like that short squeeze. Continuing, he says, it's not generally noticed by the public, but clearinghouses clear all of these trades. And when things get as crazy as they were in the event you're talking about, there are threats of clearinghouse failures. So it gets very dangerous, end quote. That's the whole thing where people are jumping on these bandwagons, not understanding how markets work, not understanding the plumbing that goes on behind the scenes, and that this is not just little guy versus the big guy. Markets are here to benefit everybody. Markets can be a win-win situation. That's not to be weaponized. It's not to be used as a personal vendetta because you don't like a hedge fund or an institutional investor or a CEO, etc., etc. Again, no longer a nation of laws, but a nation of men. This is the jungle. The specter of a clearinghouse failure was one of the issues raised during the U.S. House Financial Services hearing on the Reddit-fueled trading frenzy earlier this month. During the hearing, Vlad Tenev, the CEO of Robinhood, the online brokerage popular with retail investors, admitted that the company would not have been able to post the $3 billion in required collateral that the Depository Trust and Clearing Corporation made against the company in late January after investors flooded the platform with trades. In a worst-case scenario, this ultimately could have forced liquidation of the unsettled clearing portfolio and resulted in a total lack of access to the markets by users, according to Tenev. Ultimately, Robinhood restricted trading in GameStop and dozens of other equities to the chagrin of its users. This is Munger now. Quote, It's really stupid to have a culture which encourages as much gambling in stocks by people who have the mindset of racetrack bettors. And of course, it's going to create trouble as it did. And I have a very simple idea on the subject. I think you should try and make your money in this world by selling other people things that are good for them. That's exactly what markets are here for. And if you're selling them gambling services, where you rake profits off the top like many of these new brokers who specialize in luring the gamblers in, I think it's a dirty way to make money, and I think that we're crazy to allow it. In another question, Munger was asked whether he still identified wretched excess in the financial system, as he had warned of in February of 2020, and asked where he saw the excesses as most egregious in the current market. Quote, it's most egregious in the momentum trading by novice investors, lured in by new types of brokerage operations, like Robinhood, and I think all of this activity is regrettable. I think civilization would do better without it. I happen to agree with that. And I also happen to agree, in free markets and allowing people to do what they want. I mean, this is their money. It's their risk. I just think it's going to cause a lot more damage than it is going to add to any type of net benefit. And people are ignorant. And people don't know. They don't understand what's going on. They think everybody's their best friend because they're in a group on Reddit or Twitter or some other social media platform that they're following, and they think these people are looking out for them. They already bought. Now they're telling you to do the same thing. Pump and dump schemes. I don't know where the regulators are on this because that's illegal. That's wrong. That's fraud. And this is what we're going to continue to witness. You know, I was hopeful, like an idiot. I don't know why I was, but I was hopeful that this wasn't going to happen again with GameStop. And here we are only a few short weeks after the fact of the first frenzy, and we got 100% up on the day and almost another 100% in after hours trading at 83%. So we'll see what happens tomorrow. The futures are in the green. Everything seems to be just fine, but we're going to continue to pump more money into the system. Oh, that's why everything's going up, not because the system's getting better, not because it has a leg to stand on, but we're going to continue to throw money, funny money into the system. I got it. I got it. Because it's a funny thing. Like I said a month ago, it would be very interesting if GameStop is, you know, a play on words here for GameStop the system. That's it. The game is over. GameStop equals game over. That's the question. That's the question. And that's an argument that can be made. These systems are, these markets are broken. The question is, how much longer can they run? We're going to find out. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Kreitis. Godspeed.